Welcome everyone. Thanks for joining us this morning, and thank you, Brian, for the introduction. My name is Scott Eldridge, and I'm CEO and Director of Canagold. I'll just direct your attention here to our first slide. This gives you sort of an image of what I'll be talking about today for the next 10 minutes. This is our flagship asset called New Polaris, located in my home province of British Columbia, and we're an exploration and development company where we also have an opportunity, as Brian explained, for some blue sky potential to add to our existing resources while we go through the development phase towards permitting and potentially building a mine. So I'll direct everyone's attention to our standard cautionary note, as I may be making some forward-looking statements today. Just give you a snapshot of our public company information. So we do have 3 listings. Our main listing is Big Board TSX here in Canada, and then secondary listings in the US on the OTCQB, as well as Frankfurt over in Europe. We do have a fairly tight share structure, approximately 87 million shares outstanding. We're trading at about 27 cents right now, so it puts our market cap just under 25 million Canadian dollars, and we do have about $2 million in the bank right now. We do have a collection of institutional shareholders, as well as a few high net worth individuals, and our founder and chairman, a gentleman named Brad Cook, that many people may recognize that name. Collectively, our top 5 shareholders control about 40% of the company. And we do have analyst coverage from Red Cloud Securities, in addition to Brian Lindy. So my background, been in the metals and mining industry now for 13 years, mostly on the money raising side, having worn various hats of analyst, merchant banker, and then for the last 6 years, I've been on the issuer side of the business. Our founder and chairman, again, is Brad Cook. He's also the chairman and founder of Endeavour Silver, which he built from scratch into what it is today. Our president and CEO, Gary Biles, is a mining engineer. He's a builder, he's an operator. He's done it 4 times in his career. The most notable project on his resume is the Eskay Creek mine, where he was part of the build and then mine manager for Homestake before they were taken out. So Gary's done this before in British Columbia. Knox Henderson is our VP of Corp Dev. He recently joined us about 6 months ago, having had some great experience with Great Bear as well as Kodiak Copper. Troy Gill is our VP Exploration. He's Australian, hails out of Rio Tinto, twice won their internal award for Discovery of the Year. And Philip Yee, Chartered Accountant, is our CFO. Our board of directors is led by Deepak Malhotra, a PhD metallurgist out of Denver. Martin Virion is a CACBV out of Vancouver, and then Brad and myself on the board. So let's dive into the project side of the things. We do have a portfolio of exploration projects within BC as well as the Western US, and we do look to option projects out that we don't spend our time and attention on. So we do spend 100% of our time and attention on New Polaris. So a brief introduction. New Polaris is a brownfield site, and we do enjoy many benefits of this being a past producer. So there was production here from about 38 up until 51, and the old timers there were mining fairly shallow but underground at a diluted grade of approximately 10 grams per ton. And fast forward to today, we do have a 1 million ounce all NI 43-101 resource, also at 1 million ounces. We've wrapped a mine plan around that in the form of a PEA, and at $1,500 gold, you can see that the results are very, very robust. And the real difference from the past versus how we are moving this project forward is, number one, the scale. We'll be producing more gold. And in the past, they produce a concentrate, whereas we have a flow sheet design that would allow us to produce doré bars on site. Just to give you a more accurate depiction of where the project is located. So this is a very mining friendly part of the world on both sides of the border. Closest town on the BC side is Atlin. We're about 100 kilometers south of Atlin. True closest town or city is Juneau. We're about 60 kilometers away from Juneau. And the general area here is called the Atlin Mining District, and we are surrounded by other commercial mines such as the Kensington Mine, which is operated by Coeur. Silvertip is in the area, as well as Greens Creek. We own the project 100%. This is a fly-in, fly-out project, and generally these projects around the world will work if you have the grade to absorb the cost of being off-grid. And for the last 12 months, we've been running an exploration program at the project, fully staffed. It's 20 people, and we've drilled about 30,000 meters on the project, and I'll talk about some of those results over the last 12 months. And for those of you that are obviously Ontario-based, you're very familiar with this type of mineralization, just typically called a mesothermal gold vein system, which is very common in the Red Lake camp of Ontario, less common in British Columbia. So let's move to our resource table. As I said in the introduction, we have 1 million ounces at about 10 grams. This represents the diluted head grade to the mill. So this has a 20% mining dilution rate factored in. And as you can see, our resources are split about 50-50 between indicated and inferred. And the bulk of that 30,000 meters that we've drilled over the last 12 months has been focused on infilling the inferred to galvanize the inferred and move it up to measured and indicated, where our goal there is to see a minimum of 1 million ounces in M&I before we move into a feasibility study. But in addition to infill drilling, we've also seen some exciting opportunities to make the resource bigger. Given that this is a mesothermal system, there's often opportunities to discover the down plunge extension of the main vein. But in addition to that, we're also starting to see parallel or on echelon veins that have had significantly high grade intercepts over long widths, where we're very optimistic that yes, these are resource grade intercepts, but they would also fall within the mine plan to be ounces that we can capture and deliver into our economics. This is a snapshot here of Troy Gill, our VP Exploration. He's generally a conservative guy, but hard to wipe the smile off his face when he's holding a 50-gram sample over almost a meter. If you walk away remembering one slide, this is the slide to remember. So if you can see the light sort of stopings in the upper left area that's in brown, that's where the old timers were mining again back from 38 until 51, and they were only going to 150 meters below surface. So Brad Cook, being a geologist, had the fruition when he picked up this asset to recognize that a mesothermal system always has the opportunity to drill it out at depth. And lo and behold, he discovered an additional 1 million ounces there, and that's the yellow area where you can see the density of the drilling. And then the blue area is not resource, but that represents the blue sky potential, where the resource only goes to 600 meters, but these type of systems can often go for 1 or 2 meters below surface, or sorry, 1 or 2 kilometers below surface, excuse me. So to talk about resource expansion opportunity in terms of parallel veins, I know this is hard to see here, but in some of our news releases recently, you would have seen results on the C9 and the C10 vein. Yes, we knew these veins were there, but no, they do not contain any resources. We're very optimistic that the C10 would add probably a minimum of 100,000 ounces, if not more, to our mine plan. And you can see it's fairly high up in the system and very close to the C-West main vein, which is the host of the 1 million ounces. And that's the yellow vein there that you can see in the image. So why are we so optimistic that we can make this project bigger? It's great to have a 1 million ounce resource at 10 grams, but when we look to analogous deposits, again, more in the Red Lake camp of Ontario, these types of systems are what we call generational type projects, where you'll go and build the mine off of a feasibility study with a 10-year mine life, but 10 years later, you probably still have 5 or 10 years of mining ahead of you because you've continued to drill the project out at depth once you're underground mining, and we see no geological evidence that this deposit does not continue at depth. Given that we're high grade, we certainly like to brag and boast about that. The industry average in the gold mining space is largely skewed to open pits, just like every other mineral, where the average grade is about 1.35 grams per ton. We're 7.5 times the industry average. So we all know the proverb, grade is king. That proverb absolutely resonates true on this project, New Polaris. But high grade is one side of the equation. What about the costing side? Well, guess what? We have both. So our all-in sustaining cost from our PEA is $530 an ounce, putting us in the lowest quartile of the cost curve. As I mentioned in the introduction, we do have a PEA on the project. We only need a small mill here, about 750 tons per day, because of the high-grade nature of the project. So that also contributes to a relatively low capital cost, where it's only $110 million to build the project. And that would give us about an 8.5-year mine life to produce 80,000 ounces of gold per year. And one of the things that I like to look at is what is the after-tax IRR of the project. At $1,500 gold, we hit 56%, which is considered very, very robust. And our ultimate goal with a slightly larger resource is to directly see that have a knock-on effect to a better economic profile come the feasibility study, where we're looking to see 100,000 ounces of production per year out of this project. As we move along to our peer comp, whether you like to use PNAV or enterprise value per resource ounce in the ground, you'll probably come to the same conclusion as us, that we are undervalued relative to our peers. So our enterprise value in US dollars per global resource ounce in the ground is approximately $22 compared to our peers. And by peers, these are projects that have a minimum of a resource along with an economic study, either in Canada or the US. So as we wrap up today and move into a conclusion, we definitely feel that there's upside in our stock, and we would certainly welcome you the opportunity to join us as shareholders and come along for our journey. We are developing the new Polaris project, very high grade in one of the best mining jurisdictions in the world. However, we do have our eyes and ears open often for new acquisitions. We are led by a very strong management team and board. And lastly, high-grade gold projects are just becoming more and more unique. So to put our grade into perspective, if this were a mine again, it would be the 6th highest grade gold mine in Canada and the 11th highest grade gold mine in the world. And very lastly, I'll just mention that we are planning a news release for Tuesday if you want to keep your eyes and ears open. And I'll wrap it up there. If you would like any further information, please reach out to myself or Knox Henderson, our VP Corp Dev. Thank you.